Time for our Market Monitor segment this week, and he says that stocks are troubled by politics and uncertainty over the Fed, but that those very troubles provide buying opportunities. David Kotok, Chairman and Chief Investment Officer at Cumberland Advisors. David, great to see you. Since you're seeing troubles in the market, what are you doing in your portfolios to reposition them?
Hi, Tyler. Good to see you, too. We think you got a buying opportunity on weakness, and we're phasing into the market. We have been doing that on a scaling basis. We continue to do it because we believe that the debt deficit sequester political fight in the end gets resolved. And when it does, markets go higher. And we don't know when it's going to be resolved, but I don't believe the United States of America is going to shut down forever.
All right. Well, meanwhile, you have a couple of recommendations. They're all ETFs. They're all in different kinds of areas, and they all have done rather well so far this year. So let's go down your list. Top of your list is ticker symbol IWO. These are the iShares of the Russell 2000 Growth Index. Tell us, these are small caps. Why do you like these?
Well, I like them, Susie, because the small caps, number one, have been outperforming. And if the economy continues to recover even slowly with low inflation and low interest rates, and it looks like that's the case for several years, small cap companies will do well. They have the U.S. domestic recovery advantage in so many ways. So small caps have outperformed large caps. They continue to do so. If you look day by day by day by day, when the market goes down in this last rocky period, they go down less. When the market goes up, they go up more. So the relative performance is good, the trend is up. And the growth side is the aggressive side. If you think the economy is going to do better, we do. So IWO is a great way to be broadly diversified in a good index. It's a fund of $5 billion. It's big enough liquid for an investor to get into easily.
Give us a quick thumbnail on your second choice, which is another ETF. IBB is the ticker symbol. It's iShares Biotech Fund.
Biotech's on a tear. The sector of the healthcare industry, which is going to do well, not threatened by politics. The companies are gangbusters. It's outperforming. We own it. We continue to balance into it. We like it. We think it's gone much higher.
All right, and how do you feel about these transportation stocks? Because that's your other ETF, ticker symbol IYT. This is for the transportation average, also up sharply, 24% so far this year.
Well, transports get you into the housing recovery. You got to carry lumber somehow. They have a kicker in the rails because they're carrying oil. We don't put pipelines running in the right direction so far. And airlines, air transport, doing better. Again, slow economic recovery. You get it in transports. The nice thing about the transport index is that it is U.S. recovery based. You cannot outsource a trucker and a truck to some other country. You got to do it in the United States.
All right, David, I assume that your firm owns most of these companies that you or funds that you mentioned. Do you personally?
I don't own any security that my clients own because of a conflict. It's unfortunate for me because I have to choose less liquid ETFs because of that. We have a no conflict rule and a day late trading rule in our firm. Clients come first.
All right. Thank you very much, David Kotok. Have a great weekend, sir.
Thank you.
David's Chairman and Chief Investment Officer at Cumberland Advisors.